Today is Friday, August 19th, and this is the ADM Investor Services Weekly Market Wrap-Up. Today's guests are Terry Roggensack of the Hightower Report and Alan Bush, ADM Investor Services Senior Financial Economist. Remember, the thoughts and opinions expressed here today are solely those of our guests and should not be construed as the thoughts or opinions of ADM Investor Services or Archer Daniels Midland Company. Alan, this week, William Dudley, president of the Federal Reserve Bank of New York, said that a September Fed funds rate hike is possible. What is the outlook for Fed policy right now?
Well, I think the Fed policy is basically on hold, and in fact the financial futures markets are only saying there's an 18% chance that the Fed will raise at the September meeting, and there's about a 54% chance that they'll raise in December. Now, my feeling is that they will not be in a position to raise rates this year, so I would be looking for a hike in the Fed funds rate sometime next year. So look for more accommodation overall and at least a rather dovish, unbalanced Fed.
And Alan, you mentioned that you are becoming more bearish on the 30-year Treasury bond futures in spite of the recent release of dovish minutes from the last FOMC policy meeting. Why is this?
Well, we did have the bond futures advance with the minutes that were released that were dovish, but that would seem like to be a one-day situation. Today we are seeing the bonds lower, and I think what is going to be the overriding influence is the gradual increasing inflation levels around the world. And it was actually last November where we saw global deflation turning into gradual inflation. So I think that trend is likely to continue. I think inflation, though very limited now, is going to be a problem down the road, and that will be a major headwind for the bond futures market. So we are turning bearish on the bonds, and I think that we will soon take out the 170 support in the September Treasury bond futures.
Terry, can you comment on the grain markets right now? In particular, what do you think about the yield potential for soybeans?
Well, in general, we're seeing some of the best weather we have ever seen for crops this year. In 1993-4 time frame, we saw a huge push higher in soybean yields. And so from 1994 to here, the genetics have become so much better. And in the last 3 years in particular, we've seen an increase in some of the genetics that could cause the bean size to pick up quite a bit. With the perfect weather and the genetics that we've seen, we have to go back and look at 94. We saw a jump above trend yield of 15%. If we see that this year in beans, you could be talking about a 53 plus soybean yield. Now, a 50 yield will give us about a 418 million bushel carryout, which would be seen as pretty negative right now, but a 52 yield would give us a record soybean carryout, even with the huge demand we've seen from China here recently. So we're really looking for the possibility of a shift in focus from the very aggressive buying that we've seen from China over the past 2 to 3 weeks to a focus to the potential for a new massive increase in yield for soybeans, and maybe a $9.40 to a $9 price for November beans.
I guess a follow-up, the USDA recent report came out with a pretty lofty yield number for corn. What do you think about that number, and are we going to be there?
Well, the market was really shocked with a 175.1 bushel per acre yield for corn. Unlike soybeans, the corn market needs cold weather, we have found, in the last 10 times where we've seen a huge jump in yields over the trend yield. Each one of those 10 years we saw below normal temperatures during the month of July across the Midwest. This year temperatures were higher than normal. We think that the crop tours that start next week are going to show tip back issues, heat issues with the density of the plantings, and that the yield will probably slip back to 172, 173 area. That might give us a little support for corn. We don't see a price below the 330, maybe down to 319 level as a bottom for the corn market.
We put you on the spot just a minute and say, you know, you're a producer right now of corn and soybeans. Is there something you should be doing from a risk management standpoint?
I think if I was a producer of corn or soybeans, I would see the downside in soybeans and the ratio of soybeans to corn being at a near record high, that if I was going to hedge my downside risk for corn or soybeans, I think I'd buy a 970 put right now. Corn probably, corn has a 10 to 20 cent downside from here, but soybeans, if you buy a 970 put and we break to $9, you could make up quite a bit of that by being in the bean put.
More risk in the beans probably than the corn right now, just due to where the current prices are.
And where the yield's going to go. Soybeans do not get impacted by warm weather the way corn does. Corn doesn't do well in hot weather. Beans do fine in hot and wet weather, and we've had a lot of wet weather this year for beans, and we're finishing them out great.
So let's just comment quickly on the wheat stocks. What's going on in there?
Well, I think in the wheat market we've got all the fund traders heavily net short, near record net short position. All I've heard for the last 2 months is that we're going to see a new record high ending stocks in the world, another 11 million tons over this past year. But I think what traders are missing is that China corn or China wheat stocks are going to go up 15 million tons this year. So if we pull China out of the equation, world wheat stocks are actually going to end up lower. Europe's having a lot of trouble with way too much rain during the late summer period. And we could find that, well, we have found world wheat prices are already starting to creep higher, even though Russia and Ukraine will probably stay at the low end. They're creeping higher. And we see the wheat market as vulnerable to a short covering bounce. Maybe not a bull market, but it seems like conditions are not as bearish as they were a month ago.
Let's flip back over to the stock market, Alan. On Monday, the S&P 500, the Dow, and NASDAQ cash indexes hit all-time highs. In spite of this, many analysts are becoming bearish, citing a weak corporate earnings outlook. Can stock index futures continue to advance?
Well, I think they can, but we are seeing some pressure over the last couple of days, and that I think is primarily due to several Fed officials that started talking hawkish again. And it seems rather ironic when it comes down to meeting time for the FOMC. They have a tendency to be on hold or dovish, but as soon as the meeting is over, Fed officials start talking hawkish again. So I think the Fed is not in a position to raise rates, and I think the idea that the Fed will be on hold for quite some time is more important of a fundamental than earnings, which is a reflection of the past. So with interest rates likely to stay low here in the U.S. and globally, that should be the fuel that sustains the bull market, and we are looking for some new highs in all of the indices within the next month or so.
One of the markets that continues to be interesting is the energy markets, and particularly the crude oil market. Terry, maybe you can comment on the crude oil market, where we are right now, and we may be at a very interesting point.
Well, we've just been seeing the dollar, for instance, has been really coming down this past week. That's helped a lot of commodity markets. The crude oil is well up off the lows and continued to rally last week, and now this week kept going up, even though a lot of people were talking about the big supply issues that are present at the moment. So if the crude oil keeps going higher, I think that's telling us something about the world economy, that it might be doing better, or that there is some kind of deals that that the market is not anticipating at this time, some type of supply shock.
So when you talk about deals, Terry, you're talking about some type of production deal?
Yes. With the, not just OPEC, but with the non-OPEC guys getting involved here recently, there could be something something developing, or the world economy is just doing an awful lot better than people believe.
I totally agree with Terry. There's something going on. This market is performing much better than the news would suggest. So with prices advancing as they are, it is telling us that something good is going to happen. There's some type of bullish news in the works. And I think the market, as it has been advancing as much as it has, is foretelling some type of bullish news that is likely to be known soon.
Thank you both for your thoughts today. Remember, the opinions and thoughts expressed here by our guests today are solely those of our guests and should not be construed as the thoughts or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about ADMIS or our brokerage services, please visit www.admis.com.